the difference between REITs and real estate. You want to invest in real estate. Great. But there's a couple of ways that you can go about doing it. You can go out and create your own company. You can create an LLC that can then go out and invest in real estate like this. Now you can go out and raise money from debt, you can go out and raise money from investors, or you can have cash in the bank and you can use your cash to go out and buy this property. Now when you buy this property, the goal is to generate rental income, because now people are going to live in here or businesses are going to use the space, and then they're going to pay you rent in exchange for using or living in your property. But when you own the property yourself, you now have to operate and manage the property. You can hire property managers, but you still got to oversee the property managers. You got to make sure the bills get paid. You got to make sure the taxes get paid, and you got to make sure that the property is leased out. Because if the property manager is not doing the job, it's up to you as the owner of this company, as a creator of this company, as a manager of this company, to fire the property manager and get a better property manager in there. Of course, it comes with benefits because now you own this, so you can choose how to operate it. You can decide what type of landscaping you want to put on this property. You can decide how much you want to charge for rents. You can be as involved as you want, but it's still up to you to now take care of those decisions. And as the operator, as the owner, you get your own tax write-offs. You get your own benefits with there as well. But the alternative is, instead of you now going out and creating this company, you can go out and invest in this real estate company. Now, when you invest your money into this real estate company, you don't actually own the real estate itself. You own a piece of the company that owns the real estate. This is what a REIT is. A REIT is a real estate investment trust. And the way REIT investing works is now you are investing in the company that's investing in the real estate. And the reason why some people like investing in REITs is because now you can get that exposure to real estate. You can get the cash flow from real estate without having to actually own the physical real estate, without having to deal with the headache of owning real estate. What does that mean? REITs have to follow what's called the 90% rule. And the 90% rule says that REITs are required by law to distribute at least 90% of their taxable income, essentially their profits, to their shareholders in the form of dividends. That's why generally REITs pay out higher dividends, because, well, they're required by law to pay out at least 90% of the taxable income to shareholders, to their investors, in the form of a dividend. Again, a dividend is a cash payment that a company gives you for doing nothing except owning that stock. Now, another advantage of owning REITs today, at the time of recording this video, is that there are certain tax advantages through REITs. What do I mean? When the Tax Cuts and Jobs Act was passed, one of the provisions in there was to give investors in REITs a 20% deduction on the income that you generate. That means if you make $10,000 in 1 year by investing in a REIT, you can take a 20% write-off against that deduction, because the taxes with REITs can be a little bit different, and sometimes you don't qualify for the long-term capital gains tax rates, meaning the lower tax rates with REITs. This was an incentive put in to make people more attracted to investing into REITs. However, just for full transparency, this is currently set to expire in the end of 2025, when the Tax Cuts and Jobs Act is also scheduled to expire. Will it be renewed? We don't know. We'll see what happens later, but that's what we know as of today. But the main thing that I want you to understand here is that when you invest in a REIT, you're not getting direct exposure to the property, you're getting ownership into the company which owns the property. That's the difference between you investing in a REIT versus you owning the property. When you own the property, you're buying the asset. Here you're buying the company, which is buying the asset. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.